The do's and don'ts of taking out student loans. Thinking about taking out a student loan? Before you sign that dotted line, let me ask you this. Do you really know what you're getting into? Hi, and welcome to today's video. Student loans can be a powerful tool to achieve your educational dreams, but they can also become a financial nightmare if you're not careful. Did you know that the average student loan borrower graduates with over $30,000 in debt? That's like buying a car, but without the car. In this video, we're diving into the do's and don'ts of taking out student loans. From smart borrowing strategies to avoiding the common mistakes that trap so many borrowers, we've got you covered. Stick around, because by the end of this video, you'll be equipped with the knowledge to make confident decisions and keep your financial future on track. What are student loans? Let's start with the basics. A student loan is money you borrow to pay for education-related expenses, like tuition, books, housing, and even transportation. Sounds simple, right? Well, it's not quite that straightforward. There are different types of loans, and each comes with its own set of rules and responsibilities. Federal loans are offered by the government and are generally considered the safest and most flexible option. They often have lower interest rates and benefits like income-driven repayment plans and forgiveness programs. Within federal loans, you'll find subsidized loans, where the government pays the interest while you're in school, and unsubsidized loans, where interest accrues from the start. Private loans, on the other hand, are issued by banks, credit unions, or online lenders. They might help fill gaps in funding, but they usually have higher interest rates and stricter repayment terms. Understanding these differences is crucial, because the type of loan you choose can significantly impact your financial future. The do's of taking out student loans. Let's talk about what you should do when considering a student loan. First, assess your actual financial needs. This means calculating how much money you'll need for tuition, housing, books, and other essentials. It's tempting to borrow more for extra spending money, but remember, every dollar you borrow must be paid back, with interest. Do your homework on loan terms. Research the interest rates, repayment options, and any other conditions attached to the loan. Tools like online loan calculators can help you understand what your monthly payments will look like after graduation, so there are no surprises. Always prioritize federal loans. Why? They come with benefits that private loans usually don't offer, such as lower interest rates and income-driven repayment plans. Plus, federal loans often provide a safety net if you face financial difficulties down the road. And here's a big one. Plan for repayment early. Even if you're still in school, think about how you'll manage your loans after graduation. Can you make small payments now to reduce your overall debt? Are you choosing a major with good job prospects that can support loan repayment? These are questions you should consider sooner rather than later. Lastly, maximize your financial aid. Apply for every scholarship, grant, or work-study program you're eligible for. Unlike loans, these don't need to be repaid and can significantly reduce your borrowing needs. The don'ts of taking out student loans. Now, let's go over what not to do. Don't borrow blindly. Just because you're approved for a large loan amount doesn't mean you should take it all. Borrow only what you truly need. Overborrowing is one of the easiest ways to end up in financial trouble after graduation. Don't ignore interest rates. Fixed rates stay the same, but variable rates can increase over time, potentially costing you a lot more. Make sure you understand how interest will affect the total amount you owe. Another mistake? Skipping the fine print. Loan agreements are full of important details that can have big consequences later. Take the time to read and understand the terms before signing. Don't procrastinate on repayment planning. It's easy to put off thinking about repayment until after graduation, but that's a mistake. The earlier you start planning, the more prepared you'll be to handle your loans responsibly. Finally, don't mix federal and private loans without understanding the differences. Combining the two can complicate repayment, so make sure you have a clear strategy if you take out both types of loans. Tips for managing student loan debt. Managing student loan debt can feel overwhelming, but with the right strategies, it's absolutely manageable. Here's how you can take control. 1. Create a budget early. While you're still in school, start tracking your expenses and set a budget. Knowing where your money is going helps you avoid unnecessary spending and keeps you on track financially. Include costs like rent, groceries, and transportation, and prioritize needs over wants. 2. Pay interest while in school. Most loans, especially unsubsidized federal and private loans, accrue interest while you're in school. If you can afford it, making small interest payments can prevent your total debt from ballooning. Even paying $10 to $20 a month can make a big difference over time. 3. Explore loan counseling services. Many organizations offer free or low-cost loan counseling services. These experts can help you understand your repayment options, build a payoff plan, and provide guidance tailored to your financial situation. 4. Stay organized with your loans. If you have multiple loans, keep track of their balances, interest rates, and repayment schedules. There are tools and apps available that can help you consolidate this information so you can stay on top of due dates and avoid missed payments. 5. Consider refinancing or consolidation. If you have high-interest private loans, refinancing might help you secure a lower rate. For federal loans, consolidation can simplify repayment by combining multiple loans into one. Just be cautious. Consolidation may increase the total interest you pay over time. 6. Set aside an emergency fund. Life is unpredictable, and having a small emergency fund can prevent you from falling behind on payments if unexpected expenses arise. Aim to save at least $500 to start, and build from there as you're able. 7. Keep communicating with your loan servicer. If you're struggling to make payments, don't ignore the problem. Reach out to your loan servicer. They may be able to offer solutions like deferment, forbearance, or income-driven repayment plans. Alternatives to loans. Loans aren't your only option. Scholarships and grants can provide funding without the burden of repayment. Part-time jobs and internships not only help cover expenses, but also give you valuable work experience. Many schools offer tuition payment plans that allow you to spread out payments over time. Starting at a community college is another cost-effective way to begin your education before transferring to a four-year institution. Common student loan mistakes to avoid. One of the biggest mistakes is overborrowing for things that aren't essential. Vacations, luxury items, or excessive dining out can add to your debt without adding value to your education. Ignoring repayment options or failing to communicate with your loan servicer during tough times is another common misstep. If you're struggling, reach out. There are often solutions like deferment, forbearance, or adjusted payment plans that can help. Taking out a student loan is a major decision, but it doesn't have to be overwhelming. By following the do's and don'ts we've discussed, you can make informed choices that set you up for success. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe for more tips on managing your finances and planning for the future. And we'd love to hear from you. What's your biggest concern about student loans? Drop a comment below and let's talk about it.